Very good. So I hope it was helpful. Any questions or comments? Any ideas?
Ramin, I mean, this is, I don't know whether it's a request or well, it's a request and a comment, but I think it would be interesting what I'd like to build, or if you could build. I know we have all these ETFs, you know, there's an ETF value, there's an ETF for financials, there's an ETF for growth, there's an ETF for overseas. And I think it would be really interesting if you were to build like a sort of portfolio of ETFs, and then every month or every 2 months when it was, you know, just rebalance it. And maybe we could have a little game with it and see if we could beat the S&P. So obviously before, like, I mean, I was just thinking about it, like, you know, before Christmas, a lot of people were saying, you know, growth is done and you should move into value and blah, blah, blah. And so I actually did move some money into value. So I got hurt less than probably some other people did. But I don't know. Do you think that would be a little fun thing just to play around with, like build a portfolio and, you know, take 10, maybe 10 areas of the economy and go, okay, you know, our little fun, because like I know you said, like, you know, energy normally has a run up from November through March. Obviously right now it's geopolitical, but normally there would be a run up. So maybe in our little portfolio, we would sell off our value ETF and move more into our energy ETF in November and then get out of it in March, or, you know, so I didn't know whether that's an idea or you think I'm crazy, but I think that might be a little fun thing to do.
Okay, Martin, let me just, it's so interesting because what I do is, you know, sometimes for our lessons of the week, I kind of start the whole week. I start planning for that lesson of the week. And guess what is one of our lessons of the week? Since I was doing this intermarket analysis, I decided to have a proxy of ETFs for each asset class. And so that was the starting point. Let's put it that way. So let's say if you want to invest in real estate, well, what is the best ETF to do that? And again, we are looking at the correlations of these asset classes, right? So the thousands of ETFs. So which one will be the best proxy or best ETF as a proxy for this asset class? So I've chosen that, and that will be our lesson of one of our lessons of the week for this Saturday. And based on that, let's say, like you just mentioned, I think I've chosen, I think maybe 12 different segments. Again, like let's say there's a gold, and there's for the bonds and for the real estate and international. So what are they? And each one, and that's what I want to make sure we have this live class so we can do the correlation. So rather than going, okay, what is the growth fund of this? We could actually use ETFs. And that's another reason I want to share that the portfolio visualizer. It's like, it's really good because we can put any type of ETFs, and especially those master ETFs, and set up a portfolio just using that. So of course we can insert some segments that you might find value. And in like in the portfolio management, you know, we have the core, which will be like this, and then you have a satellite, which will be something that gives you that alpha, gives you extra. So we could also find something which is completely uncorrelated. In the past, I've used, for instance, let's say Vietnam, you know, which didn't have a lot of correlations. This now it does more than before, but you know, something outside the box, we could also do that. So, I mean, that's what I, you know, as a portfolio manager, it was always fun to do, but now because we do a lot of trading, we don't. But yeah, so let's do this, Martin. I'll introduce that. As I said, that was funny because that's part of my lesson. I will do that on Saturday, and I'll introduce that and get a little feedback. And then one more thing added to our project, so we'll do that. That will be fun. No, I'll do that. But I mean, the good thing is I'm hoping by providing some of these resources, and we have such a capable membership. We have such a great membership. We can all work together because that works out great. And the other good thing is, thanks to Matthew, we have our Discord, which is all segmented. So that could be under the trades or the ideas, or, we can always check back to that, or investing, and have inputs on that. So, and then, we all share ideas. So, but that would be the starting point. As I said, I've come up with my own proxy, but you can always come with your own and say, oh, I mean, maybe we should have this. But that was my after class, you can choose and work together on that guideline. So, Martin, no, that makes sense, and I think it will be helpful.
I've lost my internet.
Did we lose Ramin?
I think so.
Yeah, I got
I
lost.
think the network seems kind of stuck there.
He's not moving anymore.
Yeah,
Oh,
he's
there he
here.
is.
Oh, there he is. Yep.
We can't hear you, Robin. You're mute.
Okay, how about now?
Yeah, it's good now.
Oh my goodness, the Joyce, what happened?
Your connection is just broken for some reason.
Wow. Okay, but you can hear me now, right? So,
Yeah,
is it
Yeah.
good?
yeah,
Okay,
it's clear now.
all right. So Martin, I don't know how much did we hear? I just said, yeah, that's a good idea. So, well,
We got most of it, Ramin. We got-
okay, good, excellent. And I said, we have such a great group. So, and you heard about Matthew, what he has done. So we can do it in Discord and with ideas, and perfect. Okay, any other questions or comments? Was it helpful? I mean, I always want to make sure we don't want to, I appreciated, you spend your time, just want to make sure it's informative. And we
I
can,
think it's very helpful, Ramin, to know what's happening on a macro level, and how these relationships are manifesting themselves. And you keep an eye on that. So I think it's very, very, I think it's also good for us to do what Martin was saying. So
okay, well,
it'll
we'll do
keep us-
that. That I appreciate that. So that would be more of a, again, it would be a team effort.
Yeah.
But as I mentioned, one of the reasons, and I know most of you've seen my trading style, is I really pay attention to all these asset classes. So I've said it before, my workspace, I look at it. I just want to make sure, trading sometimes it becomes sometimes spontaneous, and we just like that excitement, and you just have to be patient. So if I don't have the confirmations, majority of time, I don't get involved. I look at internals, but I want to make sure why markets are going up, but the VIX is going up. There's a question mark right there. So at that time, although I might have some confirmation from moving averages, if I'm I'm really on my toes. I am very proactive to make sure there's nothing funny going on. So, or if I see Dow Jones transportation is really falling apart, and also the bonds are going down and the VIX is going down, then, that's also concerns me. I want to make sure, that gives me a contradictory message. So either I don't take the trade, or if I did, I will be very careful. So that's another reason, I think, for the correlations on a short-term basis. But majority of the time, as you know, Jean-Claude, in the portfolio managements, we pay attention to the row, and it's important that, we pay a lot of attention to standard deviation and volatility of the portfolio, but the correlations of the assets are very important in structuring our portfolio. So that's more of a long term, but at times like this is even more important, I think. So anyway,
Right, yeah.
okay, good.
I mean, I think it's very helpful. I have a one question here. It's what I saw some other fund managers might be doing is they like to display a relative long-term ratio of several asset class to finding the extreme values or finding the trend line breaking the trend line or something like that. Do you find that's helpful?
That's an excellent question. I've used that, not like that, but I have. And one of the things I found out right now, although we did that, things are a little more dynamic. So definitely there are good indicators, but even one of the difficulties we have at this moment, even that definition of, let's say, value. What is a value when we talk about asset classes? So what is happening with the defining of how each asset class is defined. So that's why, as I said, this is more of a general guidance, but of course that would be valuable, Sean. But again, we are in a dynamic world. So we are, like Martin mentioned, looking at like a rebalancing it every month or so, which we don't recommend, as you know, Sean, in the portfolio management. Sometimes it's like a year is too short, and some people like to do 6 months, or quarterly is very, very short. But we are in a very dynamic news event and event-driven environment. So it is. You just have to look at it with a grain of salt. But I would look at that definitely, Sean. Anything like that, it's a good guidelines. And I don't have, with any services that we just shared, I don't have that, but we can set it up ourselves too. We can make it happen. I appreciate that. Sure.
Sure. Thank you.
You're welcome. All right. Excellent. I appreciate it. I hope we can all make it on Saturday. I will send you, I think, again, it's supposed to end at 4:30, so I'll be back at most likely then and set it up. So at 5 o'clock, I'll send, but I think I will do the class. If anything changes, I will definitely let you know. In the meantime, have a prosperous week. I mean, it's been absolutely interesting trading environment. So I'll look forward to seeing you hopefully on Saturday. So with that in mind, thank you so much. Appreciate everyone. Have a great week ahead.
Thank you, Remy.
Thanks, everybody.
Thank you, Ramin John.
Thank you, everyone.
Bye.